Hey everybody, it's Red Ben. I wanted to do a video that explained a little bit about some of my own algo signals that I've developed, as well as those of Ed. Um, Ed is, you can follow him on Twitter at N7EKG. He, uh, he's got some great ideas when it comes to Sierra chart studies in particular, and he's actually been kind enough to share them. And for instance, the line on my Renko bars, if you go to his Twitter and take a look at his, it says like free order flow study, and he's got a tinyurl.com link. You can get all of his studies if you want for free. And one of them involves tracking the volume point of control inside the bars on Renko charts, which is the yellow line you see here. And so the concept is something I was already familiar with, but what I hadn't thought about is how drawing it as a line to connect inside shows me the development of the volume point of control. So if you imagine this entire chart as if every one of these bars were days, um, you can imagine then using all of the theory that you hopefully know already about volume and volume profiling, you can kind of see how when volume is established higher, the trend tends to continue higher. If you're going higher, like here, you've got a pullback, but that pullback did not um, take out like the low. Like we're still, if you think about where we're establishing volume here, we're establishing volume higher here. That's what I'm trying to say. Um, Similarly here and here, right? So every time we pull back, we're putting in these like B profiles. See how it's like a hammer with the volume on the bottom, but the close at the top. So that's basically like a bullish B profile if it was a daily chart. So that's the idea, and you can use all the theory, like I said, that already exists for higher time frames, but just use it on this micro fractal. The thing to remember though is that the higher time frames still get to influence all of this, right? You you might get an idea of what the early potential is. Like here, you can see that volume is increasing, or they're establishing volume at higher lows. So you would expect a continuation, but just because you got this signal doesn't mean that you're going to rip through the point of control, right? When it's like based on the daily, or the I think in this, yeah, I think it's the daily for the blue. I've got a 3 day and a daily. I believe this is the daily point of control. It's developing at this stage because we're looking at Wednesday's RTH. So it was the developing point of control. But you might know that there's bullish energy here, if you will, but you're not going to know whether or not this is a good place to get long because that's going to depend on where you're headed on a higher time frame. But if you know already, for instance, let's say that you knew that like the 14,000 level was going to be important. I mean, most people would probably guess that, but let's say you had a reason to think that, no matter what it is. Your Once you decide that, like, okay, I know I want to get there, and I have a general sense that this structure up here, oops, this structure up here, we're in a bearish trend, and this structure needs to basically break to get lower. Again, imagine these are daily chart. No, this is the daily chart. If you're not used to Renko bars, just imagine each one as a tiny little daily chart because it's basically the same idea. But it's not time based; it's range based. So it prints a new block higher if you're going higher, and a new block lower if you're going lower, based on a range, which in this case is 20 ticks. Um, we're looking at NQ, by the way. I forgot to mention that. So yeah, if you imagine this is a daily chart, but in this case it's a Renko chart, and you see volume now is developing lower, and you knew on the higher time frame you were looking for a short because you wanted to try to get down here. Um, at any one of these points, once you get this lower, this establishing volume lower with this indicator, this study, you could then zoom in here and see that, okay, establishing volume lower. So let's look for signs of weakness, right? Signs that we're headed lower, or let's sell a turn after a retracement if there's a signal, right? And like I said, we're not going to talk about the signals quite yet, but I just want other signals. But let's just say that that's what you were looking for. This is how you would use this line. It's important to notice that when the volume point of control, the yellow line, moves up, but the bars close lower, that the result of that is right there a volume shift. So you see volume goes higher, but price prints lower. When I'm usually trading, I'm looking at a lot more than just these signals, right? And you guys have seen how kind of busy this chart has become over time. And a lot of these are from the TradeNPerform room from Simon. And those are my primary signals, right? The ones I use to get into most of my trades come from those signals. So I've taken those out, like I said, and now we have just the ones that Ed made, the VPOC, and then the ones that I've added, which are, there's 3 of them here, and they're inverse to each other. You have the dots, green dot, red dot, and those are called, those are mine, and I call them excess dots. Okay. They're exactly the same, red and green, they're just inverse. Then there are the outlined candles, red and green. Those are known as trapped trader candles. So there's someone trapped at the wick, is the idea. And then the other study I've added is the absorption study. Bearish looks like this, orange on the inside. And then bullish absorption looks like this, the hunter green, here on the inside of the candle, or the bar, I should say. That's the indicator. That's the signal for absorption. So, like I said, these are things that I can explain to you because I built them. And I figured it might be helpful to know what they mean. Let's talk first about what these dots mean, the excess dots. What they're telling you is that the angle of price and volume, both price and volume, the angle is so sharp, yet they have pressed price higher. And so keep in mind that depending on what the conditions are on the higher time frames, and even this time frame, or this tick chart, this range, you could say, just getting price higher without volume getting higher is not necessarily a sign that a trend is ending, right? And so the term excess might be a little bit excessive. I might have to rename them a little bit, because I think people think of excess as like the end. And that's not what I'm trying to convey here. What I'm showing is between the last few bars, there was so much selling that we're now getting a response from that. So in a bearish trend, this is going to be profit taking. All right, so here, 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 and then let's see, yeah, all the dots, and that would be the bottom, the low of the bar. And keep in mind, you don't see these signals. You see them that they might be coming, but you don't know for sure if they're going to be on that bar until the bar closes, when you have all the information finished on that bar. So price is here, and you've now confirmed a dot here. And so when you go on to the next range, you're in here, in this, you have an opportunity to participate in this range, and you now know that this bar got like so excessively bearish on this micro time frame that it produced a reaction. And that reaction, then what happens during that reaction can give you some ideas to set up trades, just like you might use the sign of profit taking on a higher time frame. In this case, it's just so zoomed in that you need this immediate alert that, hey, this trend is like cooking, right? So that, you know, what you're going to do here is going to be dependent on other information, but that's what it's telling you. And like I said, the most important thing to keep in mind is that every one of these signals, including Simon's, they're going to, how you use them is going to be completely dependent on what phase of the market you're in and what time frame you're trading. So, and then you can adjust the tick chart to match that, which is pretty neat. So, like I said, in this case, we're looking at 20 ticks. So this is like a pretty fast bar. It only needs 20 ticks, and there's 4 ticks in a point. So 5 points, and you've got printed another bar. So yeah, those are the dots. And like I said, it's the same exact thing on the red dots, just in reverse. So this angle is so steep that you're going to get some sort of a response, but whether or not that response continues down here as a sell, like an actual ending to a move, exhaustion, if you will, is going to depend on other things like structure. If you get them, you can see like this one happened to lead to a drop, but this one did not. If you put your stop right above this and you got short in this bar after you learned that this bar had a dot, you would lose, right? So by themselves, it's not like they're sell or buy signals. If anything, the only time when they might act on their own is when the very next bar takes them out, basically, like this. That's basically your best sign that a heavy trend might be continuing. But the thing is that like that doesn't always work either. See, so like by themselves, they're not a trade signal on their own. But yeah, that's the dots. The outlined candles, right? So here, this one is a green outlined candle versus a regular bullish candle, which is just white. So green one, again, we're not looking at the dots. We're looking at the outline of the bar. Here, I'll make it really big. Okay. So if you make it bigger, it's a little more clear. My apologies. I'm looking at this at a big TV. I forget some people are on a laptop. So when you're zoomed in, you can see that the outline of this candle is green, but the inside's white. Whereas a regular bullish candle looks like this. The alternative is the red versus just the brown with no outline. So this one's like a highlighted bar. And you can see it particularly in the wick. That's where my eyes generally go, because you can see when there's no signal, the wick is white. Right? When there is a signal, the wick is green. So that's usually the first thing my eyes see, is that the wick is a different color. So what this signal is telling me is that price, hold on. Okay, so price, let's talk about the green ones. The price during this bar reached underneath the volume area considering the last 10 minutes as if that was an entire session. Okay, so again, it's a little confusing. Let me explain it one more time. If you consider the last 10 minutes, which, could be in this, you can look on the bottom. Hold on. You can look down here. So, okay, let's talk about this one. This red one, let's say, just because it happened to land right about at 10:20. You can see the price, the central time down here, 10:20, right here. For the last 10 minutes, so since 10, which was here, the volume area, wherever 70% of volume was, right, which was like a shaded area in here, this candle tested above volume area high, might be like right there, and it closed lower. Okay, so here, let me turn on the volume area for a minute for those who are having a hard time seeing this. No, which one is it? Because I think this is another, I can share, I can understand this one completely because it's shared by Ed as well. 10 minutes. Okay. So we're going to add, there's going to be some lines that we need to get rid of. And then we're going to ignore that. And we're going to add this and this. Okay, apply. There we go. All right. Oh, it did. Sorry about all the extra lines, you guys. Ignore the red for a minute, or the purple. Ignore that for a minute. That's just the VPOC from before, based on this 10-minute study. So what I'm talking about is actually these lines here. This is the volume area high of the last 10 minutes period, and this is the volume area low of the last 10-minute period. And it's developing, right? It's like where it is if the session stopped, the 10-minute session stopped right now, it would print here. But the 10-minute session might not end until here at 10:20. And so you end up getting this squeeze effect and this red candle. So it is helpful to have these lines here to better understand what's happening. And I will sometimes turn them on when I review a session. I personally find them distracting when I'm trading because I've already got a signal that alerts me that something interesting is happening with it, which is these outlined candles. So this one's real clear. You can see this red outline candle. It tested above the volume area high of the last 10 minutes. This, it's hard to see because it's also got a green dot on it, but this one tested below the volume area low in the last 10 minutes. After doing that, it closed the other direction, right? Tested above, closed lower than the previous bar. This one tested below, volume area low, closed higher. So what is that telling me? How do I interpret that? Why does that matter? The first thing to think about is that just like the dots, that information is not going to always tell you the same thing. It's not a signal by itself. It's going to be a part of another signal or other signals, or at least it's going to help you better understand what's happening with price, even if it's not actually a trade signal. But when do we get these candles? The answer is there's basically two times when you get them. One of those is similar to when you get these excess dots. You can see that quite a few of the green candles have excess dots on them. It's quite common. In fact, the ones that don't, like this, are oftentimes more relevant than the ones that do. This one, for instance, is also much more relevant than this one. The other thing is when they are at swing highs and swing lows, which you of course don't know right away. But for instance, this one is at a swing low, right? That candle range here becomes important. Which, like I said, is something it makes sense to me considering that they have traded below here and trapped traders below the volume area. And then we went back into the volume area despite testing below it. So it's like a probe beyond and fail on a very, 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 very small time frame. Because we're looking at a 10-minute volume area and a 20-tick bar. So as you can see, it can do that a lot before it turns. So just because you see red candles here does not actually mean that you're going lower. And so making them red may have been a mistake. And thankfully, if you have it on your desktop, you can make it whatever the heck look like. Well, you can make whatever symbol you want. It can be a diamond on top of a triangle. Fill in the candle, color it whatever color you want. You can change all that to whatever your liking is. So for me, I just use the red and the green, but it might be a little bit confusing because it's not always a sign of weakness, depending on what happens next and what happened before it. So in context, they're very helpful. Just like in a on a daily chart, knowing that you close or that you tested for the first time, like since here, like which is the last 10-minute period, you can see the little squeeze there. They tested above and then immediately rejected. These guys did the same thing, right? And you can see what happens here and what happens here is totally different. So once you see this beat, or once we get beyond it, and especially once we start trapping traders on the opposite direction, you can be more confident that the next move on this micro time frame is probably higher. Similarly, find some green ones. So, well, you can just talk about this one. So for instance, this one got immediately beat in a downtrend, and that resulted in lower prices. So you can think about that way. This one did not get beat right away and resulted in higher prices. So like here's some red ones. This one actually does not get beat, but right away, right? Then it chops and prints another one, and that one continues. And the last two I've added, the last signal, is the absorption. And what's going on there? So this is this bar, and then this hunter green bar on the opposite side. What's happening here is you've got volume point of control used to be higher, and we printed a bullish candle, meaning we made it all the way to the top of that Renko bar range. Then the very next candle, which happens to be the signal candle, closed at the low below that previous candle, and volume established lower. So what I'm trying to think about, so if you are looking at a daily chart and you see price move higher with volume, and then the very next day price perhaps tests higher but closes lower and establishes volume below the previous open, like underneath its range, right? That might be helpful. It doesn't always mean that you're going to have a downtrend, right? Or even like a rotation, but sometimes it will. And in addition, these areas become pivots extremely often. So, and especially when you have two of them like this. See this little like backwards S? I can't tell you exactly what it's called, but that structure is significant. And the reason is later on, let me turn off these 10-minute VBOX. Hold on, because I think it's confusing having too much stuff on here. Having these two here, so we can see that here. Let me draw some lines here. So we got this one and this one, right? So that area, I don't know if that we actually even get down there. If not, we'll find another one. Oh, there we go. So, oh, interesting. So we actually tested below it, but then I bet, let's see. There we go. That looks a lot better. So we got below it. Oops. Here. We got below. Right. We put in some absorption to the other direction, this one. And then went higher. So a low volume drop, decreasing in volume, then reversal with lots of volume, and absorbing those sellers. Get immediate pop, and then when it comes back to rest, right? That's why you get a lot of them here. It rests at that same level because you hadn't visited it before. So it's like this S curvy thing, backwards S. This structure that I pointed out that was built by the orange versus the green, and then signified by these two green lines, and the middle of which is basically that midline of the voodoo range, which is the pink lines. If you move it, Like I said, it like did like a head and shoulders here. See that? Inverse, left, head, right. It doesn't have to be pretty. It's just a Renko chart. Like it's just the concept. We established support, tested below it, probed below it at lower volume. We absorbed, came back to that same exact level and lifted off. It's a classic. Sometimes it comes back again. And keep in mind, we are on a small time frame, right? So you have to understand, this does not mean that if you're in a downtrend, this does not mean it's done. Okay, you can measure this. Watch, you can measure this. So see what that is. So now I'm gonna come up here. Okay, so that's a head on top of the head, right? I measured the head. I put it down on the lowest point on the right shoulder. Okay, and it pointed us, that measurement gave us this, like, let's say this green area, right? We got here, which is above that green area. Oops, sorry. And at that point, we get absorption again, the orange. We also get a sign of some excess on a tiny time frame, right? Which again is the angle of volume and price going so fast and so high on so much volume that we're going to get some sort of a response here. And that happened to align with a location that was relevant. It also ended up being the top of the developing point of control, but we didn't know that at that point. And why I say it's relevant is because we're over this midpoint of the voodoo range, and we're almost exactly the measured move of that head and shoulders is here. We got above it. Now again, keep in mind, like I've said so many times, the market is not about like solid brick wall lines. It's about like where to pay attention. Draw your eyes to the market when they start testing and breaking this, especially when they retest it and try to go higher. Everybody's buying this, right? But look at volume on the bottom. That's volume ratio of volume to the price range. But still, you can see that you'd think that everybody, if they wanted this to go higher, and you see this bounce here, you usually see increasing volume up here. Nope, we got absorption of all the buying. And then they tried to save it right at the level, and they failed. So they tried to absorb, there were buyers here absorbing these cells. That's what this green just tells us. The hunter green is just the opposite of this, right? And as you can see, you can't just sell the orange and buy the green. That's not going to do it. You need to know that this might be bearish. And that's where people get frustrated. Now, keep in mind, even if you do know what's going on, I shouldn't say no, even when you have a pretty good idea, let's say, that I should be looking for exhaustion in this area, whatever you were using, whatever reasoning, maybe you looked at a volume profile from a 3-day, or maybe you looked at where yesterday's BPOC was, or maybe it's VWAP, like whatever, right? Like, you need to know this is an area I'm looking to sell. And when you get a buy signal on this tiny time frame, right into this area that would make sense for someone to try to defend, when they see this dip, especially if you look down here, I can't get down there with the arrow, but if you look down the bottom, it's on decreasing volume, right? It's not that convincing if you thought this was going higher. And so they defend it. And so they absorb all the selling here, which is like just some profit takers, some people just buying or selling the breakdown, whatever. You get some absorption here. And they just they run into a wall, right? And then everybody liquidates. It's just an evacuation, like Simon says. So that's what tends to happen when these fail. But now look, if we get back here again, this one already was active, right? If you've got all these buyers, buy, and then all of a sudden they run into just this huge wall, this guy who just wants to sell everything. Let's just say maybe it's one guy, and he's got like so many contracts from down here, and he's just done. What? Like, I don't know why. Maybe he's going on vacation. He has to get rid of everything. He absorbs all those buyers, and then keep selling, right? So the more energy that's collected in here, the bigger the explosion you get. Sometimes that explosion happens right away and that's it, and it just like cascades. So other times it comes back. Okay, so see how this is in the exact same spot, right? I haven't even moved this. I'm just going to adjust this a little bit. Oftentimes, what happens is the energy from this, it like has a first wave, and then after some rest, because we got a little bit excessive here, you get another reaction in the same spot. And then what's really cool is when it's done its thing and there's no more momentum, what you get is you get them beat like this. This one getting beat, see that? And then this one gets beat here. And hopefully we get a, yeah. Okay, so it gets beat. This one did not hold, right? But eventually we should get a pivot here again. Let's see. I actually don't know if this one specifically worked, but what usually happens is you get a retest, you get a breakout, a retest, and then you break another one. Yep. See how we broke this one? Okay, so this one just took 2 tries. And it's the markets, right? Like nothing's exact. But, and again, this one already let off a lot of steam, right? This volcano, like it started all down here. You got all this, well, actually it started earlier than that. Where's the first time? This. So it started, I think, here in all this sideways. You've got 1, 2, 3, 4. These are all building momentum because it's not going anywhere. See how like the momentum's just getting like bounced around in there? Like it's trying to release, but it's failing. It just prints the one on the other side and just expands. See that? Expansion. Like it used to be absorbing here. Now it's absorbing here. Now it's absorbing here. Like it's trying to absorb higher and higher. And it's not consistent. See that? So they're trying to develop that. And then the sellers absorbing here, absorbing here. They're defending, right? It's getting higher and higher. And they keep on getting reactions here. And you can see that these ones don't have the dots on them. See that? There's no excess up here. Yet you're getting absorption. Here too, no excess, yet you're getting absorption. This one has excess and absorption. And again, excess means that the move down was so intense that you're going to get something in return. And whatever that is will tell you what the next move is on the micro time frame. So again, like when they come together, when you have an excessive drop and you have absorption there, this one, like if this one can become like the start of everything, especially when it followed ones without any excess. But the interesting thing about the ones with the excess is they like, the ones without excess, like this, so they, and then I think there's one up here. Yeah. These tend to be the edges. And the reason is because their wicks are often defended. So let me show you. So let's look at this one. Again, I'm going to do a little bit of a rabbit hole, but hopefully you should be doing this with every one of your like indicators that you use. If you can't like figure out what they mean, like you have to at least see how you use it. So let's look at this wick. Okay. Again, micro time frame. Did it get a response? Yes. We pushed into it too fast. They trapped some traders under volume area low on the 10-minute time frame, and we got a response, right? So like on this tiny time frame, the reason, like part of the reason that this response is where it is because of this absorption. We found a buyer here before. he shows up again. When he fails to go anywhere, remember the last time he got this reaction, he's showing up again to defend it. Okay? So the trade is not necessarily go with the color. And again, this is another area where people just get really confused about how to use indicators and signals and studies and even the footprint. Just because this is like a green candle and a green dot, right? It does not necessarily mean that everything's bullish. And in fact, some of the most useful information is when you get behind them, right? Back here with volume. See how even the volume follows price down here? Whereas here, price comes down and the volume does not follow it, right? That yellow line just flatlines because they're absorbing. They try it again. It doesn't mean we should buy it. You already bought it here and it did nothing. Probably not, right? And when they lose it, well, they probably get a nice little extension, yeah. Now, again, once you've established that and they try again with excess, right? It went too fast. They try to buy it back and then you get absorption here. You can sell that. I can sell that right away. We've got momentum behind this one and this one. I can just sell that. Boom, sell, right? Right away. But in most cases, I can't just sell those. This one, okay, so sell, right? It comes back and it tests into this range, which is usually a pivot point. And I get another one. I'm probably selling this. Okay, I'm probably not buying this one. Unless I have another reason to. I probably miss this. And I might even sell this one. And then I'd stay short, right? But eventually I'd lose, or else I'd get, well, in this case, I'd get my risk off, and then my runners would get taken out. But I'm not going to assume just because I see a green absorption candle that we're going higher for good. This one happened to turn on one, and a lot of times they do, but just because you get one doesn't mean it's ready to go. When you get a lot of them, like I said, it means that area is going to be important. And then when you get someone testing it and absorbing again, you can take it. That's the trade that I use for that. But there's other ways to use it, okay? So these are an example of some of the things I'm using on my own that I developed, like I said, or that my good friend Ed at N7EKG developed. And we have these tools and we use them regularly, right? In addition to these, I'm also using so many of the signals that Simon's taught. And when you add some of those, when you add all of them, you get a pretty busy chart, right? You get all sorts of colors and all these extra symbols and stuff. And at first, that's a lot to look at. Someone in the room the other day said it really perfectly. They said when you first see it and you first try to wrap your brain around it, it's like trying to drink from a fire hose. You're just kind of blown to the floor with like all of these things to look at, and it's just like, this is too hard. I can't do it, right? But once you break it down and you're like, okay, let's just find one trade, right? Like I just gave you that absorption trade, one trade, and then your job now would be, if you were a new member, would be to go to the market for a couple days, if not a couple weeks, and just look for that trade, hunt it, see it, and just get used to taking it and figure out how often it stops, how far you need to put your stop, right? Like if you want to get most of the move, what's the MFE in it, right? Like how far is it actually going to go? And it's honestly a great idea to do this in a paper account. A sim account, that's the word I was looking for. This is what I did, and this is what I would recommend everyone do who's trying to learn any new setup. Start in your sim account. Yes, you will add time, but the frustration and emotions and potential for tilting away real money when you just make execution errors or analysis errors because this new trade setup is just not familiar to you, it's going to cost you so much more than your time. So instead, when you've got something new to try, and I don't care what it is, like one of the things I showed you, something Ed shows you, something you learned from Simon, something you figured out on your own, right? Like, just start with a sim account and make sure that you know like how to trade it. What does it usually do? And maybe where does it work the best? For instance, these orange bars I know will work the best in a downtrend when I'm looking for continuation, especially when they follow green dots, right? Because the green dot says this bounce was basically because this was so excessive. Well, if I get absorption here, yeah, I'm selling it. It also works best when there's a lot of room to move. Like if you're scalping, taking this makes sense because you've got this huge risk reward, right? Or reward to risk. You can put your stop a little bit underneath it. Well, I'm not going to say how to trade it out. I'll tell you how I trade it. If I was scalping and I didn't care what direction I was going, and I just decided to take every single one of them because I wanted to learn what they did, the only way to do it would be to put your stop a little bit below this, wait for the bar to print, and then get in, or else wait for some other information to confirm, and then try to get back to the next swing, right? Either the swing low or the swing high. And that would have worked really nicely. But when you take this one, you're expecting this, right? Or maybe this. Well, this time you got that. This one. So it became like I had in shoulders, which that's going to happen sometimes. What's the result? You probably get a little bit off at 10 points, and then you lose the rest because it turned on you, right? This one, like if you just waited, if you thought it was bullish and you were buying here, even though that clearly looks like an S curve to me, but if you thought this was time to go, you'd buy it and you'd stop, right? And then you'd have to have another way to get back in. That might be pretty frustrating if you didn't know that happens a lot. So before you start using any study, I don't care what it is, make sure that you've practiced it in sim and you actually know what to expect. When you realize that this is normal, then you have to decide, okay, well, maybe I can't just buy every green one because this pisses me off. Okay, so figure out when you can use them. And like I said, one thing I did right away was I saw that they work on these retracements to like confirm that we're ready to go, and that a new lower high has been put in. Just boom, try that, right? Maybe I even missed this one, but I'm not going to miss this one. And like I said, sure, that last one's going to stop almost every time, unless you hit your target. And maybe I did. I don't know. I'm not even looking at the bigger time frame here. But if I thought I was going lower and I take this, okay, that's like what, a 15-point stop max? And I probably even got 10 points for it. Like, no big deal. I think I'm going to end this one here, and then I'm going to do a second video where I add on some of Simon's algos and share what I have figured out on my own as far as how I use them, even if it doesn't help you build it yourself. Because like I said, I didn't have authorization or any access to be able to make that possible. But especially if you're in the room or you're considering being in the room, it might be helpful to have another explanation besides his of how to think about each signal and how they might be helpful for you. All of the trades that I've had the most success from use Simon's algos straight up. I don't need these additional algos to trade at all. They add some new nuances and some new ideas, but they are not necessary. Once you have Simon's, even just a couple of Simon's symbols, run circles around the trade that I just showed you, or anything else you could do with just the dots and the candles. So like I said, I'll stop this one here so that it doesn't get too long. And then people, if you want to learn more about Simon's algos, if you're at all interested in the TradeNPerform room, I'll make a second video for you guys. So hopefully this has been helpful. If it is, let me know and I can try to do more of these. And I hope you guys have a good rest of your week.